Hi and welcome back to Cheeky Crypto. Today, guys, we're going to be jumping down into the world of Bitcoin, taking a look at the recent price action, what we think is going to happen next, and all that wonderful stuff. We have moved up quite aggressively over the last 24 hours, so let's go ahead and review where we are. As I get into the video, if you find it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, then why not go ahead and check it out? Linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Okay, let's get right onto this one. Bitcoin paired up with USDT on the hourly chart, and Binance is the data source. We're going to be looking at a few different charts. We have Elliott wave theory on this one. We have your basic moving average data here on the large time frames here. On this chart, we will have our Wyckoff accumulation patterns and smart money concepts to kind of review. All of that kind of stuff coupled with some on-chain data as well. So let's go ahead and start things off with the on-chain metrics. Okay, this is stuff that we spoke about in a lot more detail in the live stream that we did this morning on YouTube. I'll link that into the video so you can go ahead and check that one out. We covered it in a lot more detail there. But essentially here on this top level on-chain metrics, I want to review the amount of inflows that Bitcoin onto exchanges in this year, 2023, right? So the 1st of January, 2023, we have seen 1.2727 million Bitcoin going onto the exchanges. And since the 1st of January, 2023, we've seen 1.2823 million coming off the exchanges. That means that there has been an accumulation that has occurred of only 9.5 thousand Bitcoin. So the exchanges have lost 9,500 Bitcoin total. That means that everyone else is just moving Bitcoin between themselves, and the participants are just shifting, right? And we can see this in the other data on chain. We talk about it all the time with whale selling and retail buying. Essentially what you're seeing here is transfers of Bitcoin from large institutional players to smaller retail investors. And that's pretty much been going on for quite some time. But nonetheless, we can see it here spelt out very, very clearly. Only 9.5 thousand Bitcoin has actually come off the exchanges or come away from the exchanges, which means there's been a lot of inflows and a lot of outflows, but actually nothing much has actually occurred. So let's go ahead and take a look at the inflows and the outflows. The inflows and the outflows in the last 48 hours have actually been negative. We've seen a lot more Bitcoin going onto the exchanges than has been coming off. Even though prices moved up rapidly, the exchanges are being loaded up. Here we can see yesterday we had 36,000 Bitcoin going onto the exchanges and 33,000 Bitcoin coming off the exchanges. Now, if I just come back one sheet here, you can also see how flat this is with the exchange balance of Bitcoin just being, just going sideways. Trading sideways. You can also see up here in the net difference over the 30-day average bars that it's very, very neutral. This is basically telling us that we are not bullish, we're not bearish, we're somewhere just basically waiting to see how the market goes. Unfortunately, with that sideways action in terms of participants, it does put us in a really precarious situation when it comes to the price action. What's driving the price action if it isn't buyers and sellers, and if it is not demand, something else is actually pulling the strings in the background, right? It's important that we kind of reflect on that. Now, as we come into the wallet counts of data, we can see that the Bitcoin dust, the 0.01 Bitcoin or more, has decreased ever so slightly there. We can also see that the shrimps decrease, the krill decrease, shrimp decrease, and dolphins decrease, right? So we can see that there's some selling pressure occurring here from retail investors, right? So the krill, which are over 0.1 Bitcoin, the shrimps over 1 Bitcoin, and the dolphins over 10 Bitcoin. All of these wallets are decreasing in size, basically indicating that there's profits that are being taken right now. As we go up into the large institutional level wallets, we can see that sharks over 100 Bitcoin also decreases, the whales over 1,000 Bitcoin also decreasing, and the kraken over 10,000 Bitcoin increased by 1. So why did the price move so rapidly to the upside if the participants aren't really, transacting in Bitcoin, right? It's interesting because we do see a lot of interesting data, specifically with on-chain stuff. So if I come over to this one, we can see that we've moved $12 billion in the last 24 hours of transactional volume through the chain. Yet we don't actually see a lot of buying and selling occurring because the wallet counts aren't really fluctuating. And that, of course, means that only small amounts of transactions are going on and lots of participants, but not really making a big dent in the overall inflows or outflows. Therefore, we put us in that really neutral position from participant perspective, right? Buyers and sellers are just kind of, floating around, kind of transacting with each other, but they're not really making a big indent on the actual crypto space, which then begs the question, why on earth is price moving the way it is if people are not buying and selling in great volumes? Well, that comes down to then taking a look at, okay, who benefits the most from the price gravitating to the upside? And are there any factors outside of crypto that could potentially be driving the price action to the upside? And well, obviously we'd have to take a look at things like the DXY. If I come over to this chart here, we'll come over to the DXY. We'll just pull this onto the daily. You can see the DXY has been going up and Bitcoin's been going up. So we know it's not really a DXY driven, and we're just hovering around the 140. But if we take a look at it from an hourly point of view, we can see that there's been some fluctuations as we kind of traded sideways on the DXY, essentially. And that's putting us into a precarious situation to think that maybe Bitcoin is now starting to actually get to a point where the imbalance or the balances between the inflows, the outflows, and the whales and the retail investors has just kind of reached a plateau. And well, now it doesn't take terribly too much to push that needle to the upside and so forth. There's definitely going to be one to keep a close eye on when it comes to the DXY and whether or not the DXY is going to drop down and that's going to drive Bitcoin even further to the upside, or whether or not the DXY is going to pump up and actually, you know, we're going to need more dollars to buy or less dollars to buy Bitcoin essentially, and therefore Bitcoin's price will drop. There's going to be something to keep an eye on in here, but definitely keeping an eye on the Forex traders and the DXY I think is going to be interesting over the next few weeks. Okay, so with that being said, let's jump back down into our hourly chart. This is paired up with USDT, and on the hourly, Binance is our data source. We can see and reflect on the structures that have emerged. We have this kind of white 5-wave structure potentially here, indicating that we do need to push up just a fraction further. And the concern that I have is the progression that has currently been made from an Elliott wave theory point of view to the upside puts us in a double top kind of scenario, but we do want to reflect on a couple of things. 5-wave structures do not just appear randomly on their own, and 5-wave structures with their impulsive nature and their trend-based structure, we have to consider means that we are going to have a short-term correction and another push to the upside afterwards, potentially. Alternatively, we could reflect on maybe this being an entire corrective structure from over here. Okay, we had our diagonal, we then had this corrective structure potentially play out. Okay, so there's a couple of options. One of the things that we know is we're going to have to keep an eye on the structural move to the downside after we finish this 5th wave. I still think we've got a little bit push up higher just in here. Okay, we can kind of see this. And if we go ahead and just reflect on this area just here right now, we can kind of get our estimates in place. Okay, so we can kind of put this in. We pulled down here, we bounced up to this level. So let's assume we do come down towards our area of support at around that 24,195, possibly. It's hard to say for certain, but we'll kind of leave it there. And if we go ahead, and this will give us a kind of our best case scenario, it would push us up more towards this area, which would breach the 25,211, which is the current top. We'll pull this in. So $25,075 to $25,354. Okay, that would be basically the area that we would focus in on and say, okay, that's the most likelihood for the 5th wave movement. But that's based on coming down a little bit lower first. Okay, so we'll kind of keep that in mind. Now, once we do this and we finish off this 5th wave high, we're going to be waiting to see whether or not we end up going 5 down like this, or whether or not we just come down in corrective structure like this. And that will tell us whether or not we've completed with the highs up here, or whether or not we actually are going to be pushing up even higher, maybe more towards the $27,000 range. Okay, so there's a few things to kind of be thinking about, but one of the things I'm confident on overall is that it's going to be a really big, healthy correction because we're heavily overbought. And what we've seen on the hourly chart, if I bring up our stochastic here and just bring it into our hourly, is the progression that we've just rapidly moved to the upside here on our stochastic. So a few more days, we'll be up in the overbought, which will marry up with our weekly chart being overbought, our 20-hour chart being overbought, 16 hours being overbought, 12 hours being overbought, 8 hours being overbought, 4 hours being overbought. Okay, so the hourly can push us up into our 5th wave high, and then over the next few days, we'll have to see how the daily goes, okay, whether or not we're going to be pushing up into the overbought right away, or whether it's going to be, you know, a week away or so. Okay, but one of the things we know is that basically as soon as we're overbought on all these kind of big time frames, a big pull to the downside is likely to occur. The other thing to bear in mind is we did have hidden bearish divergence right in here. So a hidden bullish divergence just down here. And obviously we've now played that out. We're pushed up again. And we do have some interesting kind of things occurring right up here. So I still think we have that momentum shift to the upside. So overall, it's all looking really interesting. Now the volumes, of course, are decreasing. So we take a look at this wave 1 high. We have a peak in volume, and volume has decreased. It decreased rapidly, actually, from about this midpoint on wave 3, and we have come down quite a bit here as well. Volumes are still decreasing, so again, we know that we're running out of momentum there. Okay, so price continues to go high while volume decreases. RSI is high and does need a correction on this hourly chart as well. Let's move on. We're going to talk about this chart. We're going to bring this up into our daily chart for starters. Right, we had our bullish, I think this is, this is our golden cross, right? The 50 EMA crossing above the 200 EMA, and obviously price reflected negatively after the cross. It came down, and then of course we've moved up afterwards. Right? So again, golden crosses and death crosses, they don't really mean too much, but you know, people react. Now obviously we saw negative price action on the cross. Again, not too uncommon. The strangest thing about all of these, though, are that if we bring up our weekly, we have a death cross, and on the death cross, we pumped up, right? So again, that would be bearish, and we would expect the price to go down. Instead, price went up on the death cross on the weekly, and price went down on the golden cross of the daily. This tells us that the price action is doing the opposite of what you would normally expect to see on these moving average indications, right? Of the 50 MA crossing the 200 MA, right? And you see that on the daily, and you also see that on the weekly timeframes, which is interesting because it does tell me that there's more manipulation in play here with liquidity grabbing occurring, which then ties in nicely as to why we saw the price move so rapidly in the directions that we have done recently. Now, I'm going to talk about imbalances here. We can see a couple just on the charts. We can see this one. I'm going to just drag this yellow box across here. So this particular candle right here, this is created through an imbalance. Basically, there's a lot more sellers than there are buyers, and basically the price just rapidly drops down because there's no one there to basically stop it. There's no one there to buy it as price decreases, right? So this particular area creates this gap in the chart. This is called a fair value gap, and it's created from an imbalance in the order books. Okay, now when it comes to fair value gaps, price loves to respect these and gravitates back towards them because there's no liquidity, there's no one basically stopping the price or buying, right, as people are selling. Basically these institutional investors, the people who created this fair value gap and this imbalance, they have to stop selling because there's no buyers, right? And they need price to be moving back up before they can continue their selling. So you find that the price will stop as sellers start to stop selling, and then buyers kind of start to come back in thinking that the bottom has been found. We saw this with this fair value gap here. Price gravitates up and of course comes right the way back up into this area, right? So buying occurs, and we can see that there's also imbalances in this journey to the upside here. Okay, these imbalances are basically now saying that there's a lot of buying pressure, but there's no one selling in this particular area. Okay, so now we're pushing our way back up, and there's a couple of gaps that get filled on this journey. Now, I talk about this because it's a part of smart money concepts, which is in this chart here. Now, if I expand this and make it a little bit bigger, this indicator by 𝗕𝗓𝗪 will basically plot these for you, so you don't have to go ahead and do what I just did and mark them on the chart. But let's just go and review one that happened over here, right? We left this fair value gap, this imbalance in the order book over here on our daily chart. This happened back in December of 2020, right? Price just moved rapidly to the upside. Now, back then, there was lots of talk about having to come back down into this $20,000 range because there's this fair value gap that was left behind. Okay, and we can see that we came back down and we filled the gap eventually. It takes a long time. Sometimes it takes a very long time, as you can kind of see, to play out, but you have to kind of go back and you fill these gaps. There's also gaps all on these journeys here. They don't always come down, but usually price respects them. Now, where we are in terms of our immediate price action on our daily chart is we end up with the fair value gap down here at 19 to we could call it 19 to 20k there. Then we have 21k to about 22.5k, and then we've got this most recent price move from yesterday has left a huge gap on our daily chart. Now, if I bring this down into our 4-hour chart, we get even more of these gaps that have been left behind. We can see them on the journey. This is basically telling us that the sellers were not in these particular areas, and price will more than likely, as buying pressure eases because there's a lack of liquidity, price will gravitate back down into these areas. Okay, so we can see here that we've kind of reached a kind of a premium area at the moment. This actually has come as across as a strong high. We'll see whether that holds or not. But look at the gaps here, right? We are looking at 23 to 24. We're looking at 22 to 23.3 and so forth. We've got equilibrium down here, and you also do have this area of buyers. Okay, so we can see that these order blocks are down in this low range here as well. We can also see order blocks down here. In terms of selling order blocks, they do not appear to be on the chart just yet, so we'll see whether institutions are now going to try and grab some of the liquidity that's been created in this move. But I still think we have to push up one more time before we can go down, at least from an Elliott wave theory point of view. As I said, one of the things that we're looking at here here is a 1, 2, 3, 4, potentially 5, right? So we're looking at potentially coming up here into that fifth wave movement. What's unclear is whether or not this is all a giant A, B, and C structure as it looks corrective. This could actually be a couple of different things in play. One, we actually have completed our fifth wave movement here, and this is an irregular flat correction, which is also equally possible, which would put us right in this particular area like this. Basically, an irregular flat is a 335, and then of course that would allow this still to be our diagonal kind of finishing structure over here, and allow us to kind of think about this as a 5-wave structure, with this being a correction before we move on down. Lots of different variables, lots of different options. I don't like that one personally. One of the things we're just going to do here really is check to see what happens after we complete the 5 waves upwards. But you know, I'm also really cautious that essentially we are heavily overbought on those macros, and therefore we should be thinking about nice healthy corrections. 18 seems to be the obvious area, but we'll see how that kind of plays out. Wyckoff is still technically in play, but if we do cross higher than 25,211, then that would be voided, or more specifically, was never actually in play. It was just, you know, something that looked like a Wyckoff but never was. So it'll be interesting to kind of see how that plays out. I've said many times before, we have not had the spring event. It's impossible to have had the spring event on this daily chart for the Wyckoff accumulation pattern. We've been through that before. So yeah, that's not something that's going on. If we fail here, the only other option is that this is a selling climax of phase A and our local low at the moment at 15,476. And that would tie in nicely with what the whales are doing, because the whales have been selling. Let me see if I can find it. I think it's right in here. Bring this up, right? So I see our whales have been basically continuing to sell. Here is the November, the low at $15,476. Okay, we can see that basically these whale wallets were continuing to decrease and come out of their positions all during those lows, right? So the question becomes, did they make a mistake? Did they sell the bottom? Okay, or are they in the know, and is there something deeper going on here? You can still see that they're coming out as we kind of reach these low levels, these record low levels in this bear market for the wallet counts of participants that have over 1,000 BTC in them. Okay, now this is not an uncommon thing. We saw this in 2018. We're seeing it again here in 2022, 2023. And the only differences are that this is starting to drag out quite a bit. My biggest concern over Bitcoin's price action chart so far is that we potentially are on the cusp of something much, much bigger. Let me zoom out into our weekly. Okay, is that we can look at this and we can say, okay, well, it does appear that we finished this nice move down here, and by all stretch of the imagination, that could be a fantastic place to be. But the biggest concern I have is that actually what we're doing right now is a big reset, only to come down into those lows later, right? And you can kind of see it from an Elliott wave theory point of view. We might push up, we might be able to push into that kind of 28, 30K level, right? And that would be fantastic, right? Everyone will get really giddy, really excited with themselves. And only then do we see that rug get pulled, and this another like secondary bear market kind of comes along and just rips through everyone's long positions and just absolutely crushes people. And it wouldn't surprise me. There's a reason that the whale investors, the large institutional level investors, haven't been participating in the same way that you would expect of a bullish market. Instead, they react more as in it's a bearish market and are just liquidity hunting, grabbing as much money as possible. With everything that's going on with the SEC and the attack on cryptocurrency exchanges, regulations just around the corner, CBDCs just around the corner, this could be a massive play to shake out as much of the money out of crypto as possible, whilst heavily regulating the space to a point where it makes it very difficult for a regular retail investor to jump in at the right moment. So dollar cost averaging to me seems like a really good, sensible idea, but this is, like I said, my biggest concern over Bitcoin, over the cryptocurrency at the moment. And what we're seeing from a macro standpoint, the economic landscape as a whole is something that could potentially be really bad slightly longer term. And, you know, I can't kind of rule out the idea that we come down as low as kind of $7,000-$8,000 BTC before this bear market actually concludes. But let me know what your thoughts are down in the comments below. Really interested to kind of get your thoughts and opinions on it all. And if you have found this useful and informative, smash that like button. I do appreciate that. If you're new, subscribe. And of course, if you haven't yet joined us in Discord, check it out, linked in the description below. Guys, until the next one, have a fantastic day.